Hey everybody, I'm Rob Freeman and welcome back to Insuring the Built Environment, where we talk about energy and climate technology insurance and how you can save time and money when buying insurance for your business. And so this week we are talking about an operating all risk policy, or an operations all risk policy, also known as an OAR or an OAR policy. And an OAR policy is a special type of property insurance policy that you can buy for a solar or wind project or other renewable energy project once that project's construction has been completed and that project is placed into service. And you can get an OAR policy that will cover you for a broad range of perils, not just sort of standard ones like you'd have on any property insurance policy, like fire or theft or business interruption coverage, but also more specific project coverage for things like microfractures, like you might have in a solar project that's exposed to a hail event. Or you could have other types of catastrophic risks that your lenders are asking you to cover, like flood or quake or hail or wind or wildfire risks. So those are all potentially risks that you could cover with an OAR policy. And an OAR policy can be written in a variety of ways. It can be covered for, the limit can be covered at full replacement value for all of the properties that you have listed scheduled on your policy. You may also be able to get an OAR policy that's written as like a blanket. But it's more common that you would have the project scheduled on the OAR policy. And you can choose to insure the full value of your portfolio, or you can just choose to limit your projects to a lower amount, like a loss limit factor on the property itself. And so an OAR policy will cost, the cost of the OAR policy will be determined based on a variety of factors, including where the location of the projects are. So the location's very important. So if your project is located in West Texas, where there's a ton of hail risk, and you have a large solar project there, you're going to be paying more for property insurance there for your OAR policy than you would if it was located someplace else, like somewhere up in the Northeast or somewhere in the Midwest, more in the northern area of the Midwest. The cost of the OAR policy will also be affected by your limit, obviously, how much insurance you're buying, and things like the deductibles for the cat risks, as well as what they call the AOP deductible, or all-other-perils deductible. And so these are all factors that will go into the cost of the OAR policy. And so when you're working to place this type of policy, you want to make sure that you are also going through all the different options that you have with your insurance broker, and then making sure that the carrier that you're working with is well versed in the type of energy that you're producing and the type of risk that you have for that project. So that's kind of it in a nutshell. An OAR policy is an operating or operations all risk policy. And the term all risk is a little bit of a misnomer in the sense that it doesn't mean that it covers everything that could happen to the project. All risk is just another way of saying a special property insurance form, which just means that it's going to cover everything that is not specifically excluded by that policy. So if you have questions about an OAR policy, if you're looking to place a policy for a project that you're working on, you can get in touch with me at robfreeman.com or by scheduling an appointment with me at the link below this video. Thanks again for watching. I hope that you found this helpful, and have a great day.